Good morning, everybody. Thank you for taking time out of your day to listen to me speak. I just want to talk briefly about the 2017 row crop update, what we expect to see price-wise, and what we expect to see planting-wise in the U.S. and in Alabama. So what does 2017 look like? I guess that really remains to be seen. Coming off of a year 2016, we had relatively low commodity prices, but at the end of harvest, we had some decent yields, and I think that's pretty much what we've seen the past few years, where our prices have been low, but globally our yields have been pretty steady. So we have a pretty big surplus in a lot of our crops, our stocks, and then low prices, but then we've seen a slowing of the world economies, and that increased supply of our crops has kind of kept our prices suppressed. Unfortunately, I think that's probably going to be the trend we continue to see until economic growth picks back up, or some of our supplies are reduced either through people or producers planting less acreage of some crops, or we see some weather-related reductions in our yield. So what does that mean for us? So just to start, for wheat production, I think 2016 we saw approximately 230,000 acres in Alabama. Right now we're projected across the U.S. to see some of the lowest numbers of acres planted to wheat in about a century. U.S. stocks are pretty high, over 1 billion bushels, and we're not seeing those surpluses reduced too much in the near future. So our prices at harvest are estimated right now around $4.50 a bushel. A lot of our wheat growers, especially in the areas that see a lot of wheat production, deciding to put a lot of those acres into soybeans. So what does that mean for our soybean acres? Right now we're projected to have a pretty substantial increase in the United States in our soybean acres, right at 86 million acres or a little higher. Last year, for 2016, we saw some pretty high yields for soybeans in the U.S. and in other soybean producing countries. So our stocks of soybeans pretty high, 400 million or a little higher, depending on what estimates you see. And if we have more acres going into soybean this year, our stocks could go up even higher and push our soybean prices down a little lower. Right now, projections for 2017 for soybean prices is right around the $9 a bushel price, but some economists are thinking that because we're going to have a surplus or an increase in soybean production, then our surplus could grow even more, that might push our prices down even further, roughly $6 or more. I think that's a little low. I think we probably will continue to see a little higher than that, but probably not much more. However, China has had pretty strong demand for U.S. soybeans, so that may help our exports a little bit, and hopefully our prices will stay up around $9 as opposed to getting closer to $6. For corn, it's pretty much in the same mode as all of our other crops. Pretty high surpluses. I think right now corn stock is 2.2 billion bushels. So demand for corn, particularly in China, has slowed. Our ethanol production has slowed with the price of crude oil being down. So I just saw where some of our ethanol production has picked back up. So, however, because of the reduced demand, our prices right now projected 360, maybe a little higher than that. Right now, they're expecting to see a lot lower, maybe not a lot lower, but a little lower corn acres planted in 2017 because of that price. However, U.S. production is predicted to be a little lower, but South America is expected to increase their planting of corn. So for us to get up closer to $4, we're going to have to see a pretty significant drop in corn acreage in the United States, or we're going to have to see some pretty bad weather, reduce yields in some areas for that price to go back up. For cotton, right now, cotton prices are in the 70 cents a pound. However, nobody's expecting to see this price stay throughout the season. Even so, even though our prices are a little lower than we'd like to see them, USDA is projecting right now to see 10.5 million acres to be planted in 2017. In large part because some of the other crops, their prices are so much lower and we have such a surplus. And then to 2016, we had some almost record-setting yield for cotton, and coming off of a year where we've had such a good performance, that may convince a lot of growers to continue to plant to cotton, especially since some of the other commodity prices are pretty low. Then, as far as for peanuts, right now there are some contracts that are being sold for $4.75 as an average. They may be a little bit higher. For a high leg, we're sitting at $5.50 or so. The one good thing about for peanuts is for 2016 we saw an increase in our exports, particularly to China. I think that our exports increased by about 65%. So they're still expecting to see a continued increase in those exports. Additionally, some of our domestic use for the peanuts, I think, has increased roughly 2%. I haven't seen any projections on how many peanut acres we'll have, but I think we can expect to see our acres at or increased over 2016. The one good thing is that USDA reduced our carryout and the concerns about storage for peanuts. I don't think we have to worry about that as much. So I think peanuts are sitting pretty good. Our prices have come up since last year, and demand is pretty strong. So I think peanuts are looking good. Overall, I think one good thing that producers can look for is a small reduction in the direct cost or variable cost over 2016, especially for NP and K. Those prices have come down. It's not enough to offset the reduced price we're going to get, but it will help just a little bit. Just to give you an idea, if you're looking at cotton or peanut or a dryland situation, those have come down $20 to $30 overall for your variable cost. Another good thing, and we don't track this in our budgets, but just to make mention of it, rental prices, cash rent prices have come down a little bit. Right now, overall, we're right around $57, but keep in mind that's irrigated and dryland averaged together for all counties in Alabama. So I think our dryland is probably lower than $50, and then higher for our irrigated. The cash rent prices come out, I think, later on in the year for 2017, but I don't think we'll see an increase in land rent prices. But if we can see a reduction in them, that'll be a good thing to help with balancing those budgets. And just to speak of budgets real quick, just to give you an overall sense of where we're sitting budget-wise for our crops in general. Though our prices aren't where we'd like to see them, they are a little increased over 2016. I think cotton is up a few cents, peanuts up a pretty good bit in 2016. But with an increase in those, and I think if we can have the yields we'd like to see, our average yields, if we don't have a bad year yield-wise, the one thing we can expect to see is some net positive return over our variable cost across the board. So that's one good thing. And then just looking at our variable cost and our direct cost, we have some positive numbers there, where I think last year where we were sitting, we had some negatives overall input costs. And this is for your irrigated. Same for your dry land. We have a return above variable cost with positive numbers across the board. Some of our crops, like cotton and sesame and grain sorghum, we may have a negative over our total input. But I think overall we may have to be in a slight better position than we were in 2016. going forward. Again, we don't have the prices where we'd like to see them, but overall, I think we may be in a little bit better position than we were in last year. And just to show you what some of the mindset, now this isn't economics, however, I think just to see the mindset of growers, there's several confidence indices that are out there. This one's by BTN, which is probably geared more towards our Midwest producers. But if you take a look at this graph, the index measures confidence in the current situation and then the future situation for how growers perceive the situation we're in. So if you're sitting at 100, that's a neutral perception of where they're at. Anything over that, anything over 100, the producer has a pretty optimistic of where they're at, and anything lower, and they're pretty pessimistic. If you look here, this survey is done pre-planting, during planting, during the season, and then after harvest. So if you look after harvest this past year, a lot of growers are seeing themselves way down here, pretty pessimistic about their current situation. So, but one of the really good things is if you look at what they're expecting to see in the future, they're really optimistic about where we're going. So, not that this may be reflective of how they do economically or financially, but I think it's a good thing to see that we have a lot of optimism about this growing season going into it. So I think that may be a good sign too. So that pretty much wraps it up. If you have any questions, if there's something I didn't cover, or you want me to explain something, just feel free to email me or give me a call. I'll be happy to talk to you, and thank you so much.